Welcome back, everybody. So, ratings agency Moody's has changed its outlook on South Africa's credit ratings from stable to negative. The Baa3 rating is the lowest category in the investment grade stable. So, unless South Africa gets its finances in order, a downgrade to junk status will be inevitable. So, following Friday's announcement, government said reforms need to be implemented urgently to avoid a further credit downgrade to junk status. What does this mean for you and I? How does it affect the average South African? Well, let's discuss this now with our SABC News anchor, business news anchor, Nompumelelo Siziba, as well as economist Lavan Gopaul, and he's from Merchant Africa. Good to have both of you. Welcome.
Thank you.
So, were we happy? It's a horrible thing to say, were we happy with where they've put us? But I think a lot of people were expecting that downgrade to negative. So, was this a little bit of a lifeline we got? Do you want to go for it?
I think, yes, we were happy because it wasn't the extreme, that is the full downgrade to junk status. But, and also it was almost inevitable after the midterm budget that was delivered by Finance Minister Tito Mboweni on Wednesday, because our metrics are so bad, our debt and the inability of government to raise funds on the ground. You know, SARS is not collecting as much as they anticipate every year. So yes, we're kind of happy, but also very concerned because the urgent measures that are needed have to happen quickly, and literally come February, Moody's going to be looking at whether our numbers tally with us looking to do a proper fiscal consolidation, and I fear that we just actually don't have the time.
This is the thing. I mean, I'm going to ask you the same question. We have got a lot of work to do in order to avoid that junk status. But is this a lifeline? Do you also think so, Gavan, that the reality is we were expecting to be in junk status now, but that hasn't happened as yet?
So yes, it is a lifeline. I'd like to take a step back and maybe unpack what it actually means. A lot of your viewers would be wondering, what does a change in rating mean? So rating agencies like Moody's, Fitch, Standard & Poor's, they put out gradings on companies, on countries, and this affects our ability to raise capital. In a very much smaller way, private individuals are rated on their credit worthiness in many countries, and it's becoming more popular in South Africa. So a downgrade in rating actually means that South Africa, when we as a nation go out to raise money from different investors globally, or borrow from institutions like the World Bank or the IMF, there are certain issues that are considered by these agencies that affects our ratings, and that means when we look at investors and ask them to back us with money, we're going to have to pay up. For example, Eskom as an institution is 3 levels below junk, so they have to pay up considerably when they're borrowing money. So this, yes, it is a lifeline. It gives us the ability to maybe get our affairs in order. A number of senior officials have been speaking in the last few days. Lavan Gopaul spoke, Tito Mboweni spoke. Of course, there's concerns. They do have a game plan in place. I hope that we're able to bounce from here, and this is a little bit of a second chance. So we've got to get our affairs in order, get our fiscal policy a little tighter, and I know that there's fair measures of austerity that's going to be put in place at different levels of government, and maybe that gives us a vision towards bouncing away from a negative rating.
So if we look at, I mean, you said there's been a lot of noise. Last week we saw Tito Mboweni speaking, as you say. We saw Minister Lavan Gopaul speaking as well. We've seen the President speaking. Everybody's speaking. We've got an investment forum that's coming up this week as well that we've been waiting for quite some time. But again, I ask you, is this enough? Is all this talk enough? I mean, if you look at Eskom, that is the real nail in our side. What is actually being physically done, not spoken about, done to rectify the situation?
So
go ahead. Go, Gavan, and then I'll...
we're going to have to be a lot more dramatic about how we handle South Africa's affairs on a national level. State-owned enterprises, those that are losing money, will have to either be trimmed, sold, or changed in some way. South Africa cannot afford to use taxpayers' money to be throwing it at state-owned enterprises. Eskom is unfortunately one of those that has been going through a lot of hassles. maybe some mismanagement. There's possibly wrongdoings in terms of buying coal. Certainly there hasn't been enough constant payment. And like that, many of the SOEs need to change. So I would say that's probably where a lot of action will have to happen on government's part. They're going to have to be very tight in how they manage money, and all of the corruption needs to be cleared up. So those are probably things that investors will be happy to see. And whilst we are in this trap, I say that it's probably investment that will help us get out of it. This weekend we had the Tamil Business Conference, and we were able to pick up 100 million in terms of investment, and a lot more flowing through. So I think that those are the kind of events that that'll drive the country into the plus. Solid investment that will create jobs and mobilize assets.
Nompu?
Well, my fear is time, really. So we have February, where we're going to have the main budget for 2020, and then we'll have, obviously, the end of the year again, this time next year, where Moody's is going to be looking at our situation. Anything that needs to be done to correct the economy is not going to happen overnight. No. That's the issue, and so I'm just worried that maybe the metrics won't look okay for Moody's, especially when you think about the fact that their peers, Standard & Poor's and Fitch, they downgraded us 2 years ago. So I know they have different methodologies and have different approaches, but the bottom line is our metrics are not looking good. Lavan spoke on a couple of issues, but one of the big key issues is the public sector wage bill. And of course that was raised, and the minister said that they're going to be negotiating with unions going forward about even perhaps salary cuts and getting rid of things like the special occupation dispensation or something like that. It's a special money or special amount that they give to teachers, nurses and so on, those types of people. But there's going to be a huge fight and backlash with the unions. So I don't know if there's going to be that understanding, because going forward, they're effectively looking at cutting or at least not giving increases to public sector workers next year, because currently that amount is about 35% of government's consolidated budget expenditure, which is quite a lot. So they have to pay 35% of their expenditure on salaries before they focus on the priorities: education, health, police, etc., etc.
So they're in a very difficult position. And, you know, one of the statements that Moody's did come out and actually say, describing the economy, was basically saying that South Africa's economic growth was deteriorating and it shows no signs of recovery. That worried me. That really, really scared me. I mean, we saw our growth forecast being brought down further by the finance minister last week. I mean, we were sitting at 1.5. It's now gone down to 0.5. Is that correct?
That's correct.
That's the forecast. I mean, so it is not looking good. What do we need to do? I mean, you're talking about 100 million that's from a Tamil Business Conference that was given towards the growth of the economy and creating jobs, but we're not seeing it in action. All of this money that's coming forward, where is it helping?
So a number of investors are probably holding off and they're waiting for signs of improvement. They're waiting for some signal where government shows a commitment to change. I think a number of international investors are very happy to be investing in South Africa in the right climate. So it will be, unfortunately, a bit more pain before we see the rise in South Africa, before we see a turn. Unfortunately, because of the structure of government, it takes at least a few quarters to see the impact of let's say, changes in SOEs or changes in tax policy. What I do think is the message coming through from the president trying to raise funds is something in the right place. We'd like to see a lot more action. We'd like to say, as I say, dramatic changes. The SOEs are one, but a lot more initiative in terms of entrepreneurship. We will have a big challenge because of a 30% unemployment in this situation. Nompu has spoken about the challenge with the unions, and they're on a collision course with government. So one of the ways out of that is to create a platform making it easier for small businesses. And of course, money that would have gone, let's say, to SOEs, pumping that into entrepreneurs is probably going to have much more of a success story.
Yeah. I want to understand, and perhaps I know you mentioned it, Nompu, how the different rating agencies have different ways of looking at economies and calculating, what status a country gets. So, as you say, S&P and Fitch have both downgraded us to junk status. Moody's is still waiting. A lot of it was also talk of politics and the instability in the political front of South Africa, and just the corruption that you spoke to, and many other issues. So, this all needs to be taken into consideration. But what do we need to understand with regard to junk status from 2, and yet 1 is still sitting there with, sub-investment, kind of not yet junk status? How do we get to a situation like this?
Okay. I'll just answer very quickly, and then Lavan can get technical because he's the expert.
Not too technical. let's keep it on this level of us all understanding, because it is a tough one.
No problem. But now, you see, the thing is, we are in an index. South Africa enjoys being part of an index called the Citibank World Global Global Bond Index, right? And basically, because we currently still have an investment grade, investors all around the world invest in our bonds because we are part of the WIGB. That's what it's called. So now, of course, if we get downgraded by Moody's to junk, because they and S&P will have downgraded us to junk, then it means a whole lot of money. A lot of those investors who are mandated to only invest in investment grade bonds will then pull out. They'll sell their bonds and come out, and that means a lot of rands will dollars will be sold, and the rand will depreciate, and that means obviously when the rand depreciates, we'll import inflation. So when the rand goes down, as it has in recent times, we're going to have more inflation. And so that's immediately negative. In terms of why Moody's is different to Standard & Poor's, I'm not quite sure.
Okay, I'd like to say this, that a number of these rating agencies perform similar tasks. They do very detailed economic analysis. They look at a number of factors, all of which are transparent. They then make a report, which is fairly detailed, which is substantiated about why they've done a ratings change. And based on that, investors will make their investment decision. If we do a comparison with South Africa and some of the other emerging markets, if you look at Brazil, which is a fairly decent comparison, or Russia, a number of these emerging markets have also been re-rated. If you compare us to, let's say, a European nation like Greece, which has gone through so many changes and downgrades, a lot of their bonds were trading at a junk rating, and they still found investment. So I believe that for international players that look eyes open, knowing the risk of South Africa, many of which will still be willing to make a commitment of investment under the right circumstances. And as we start eradicating corruption and showing true commitment to change, we'll attract this. A lot of the risk-reward calculations start to come up, and where South Africa shows a negative rating, it becomes riskier for investors, but the attraction of a higher reward, and with our currency being so weak, it becomes a trap for us to be able to import. But for an investor coming in, it becomes a very cheap investment destination. And so those are factors that we must consider as we gear ourselves up to change locally and attract that investment.
Well, there's a lot of work to be done from the South African perspective, business, politically and otherwise, to get ourselves out of this junk status. We've got, like you say, not too long to go until we hear that full term budget that's coming up in February, and then of course that next rating, and we need to see how we do. So thank you so much for talking to us here on the program. Of course, here with us we had Lavan Gopaul, who of course is an economist with Merchant Africa, and Nompumelelo Siziba, our SABC News anchor, trying to make some sense of these ratings downgrades, what it means, and how much work actually needs to be done to help South Africa's economy. Right now, though, just gone 8 o'clock. Let's get our top news.